Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading.
As far as, let's see, we'll get a couple, let me write these down. We'll take a look at the Aussie, the Kiwi, and the Canada. Okay, so we're, by the way, we're looking at, these have to be dollar denominated, okay? So it's got to be the dollar, United States dollar versus something else, okay? So let's take a look at the, the Aussie, Kiwi, and the Canada. Okay. All right, so Aussie, Kiwi, Canada. Let's start with the Aussie. So, symbol for that, by the way, you get two choices. You can look at the AUX, which would be the US dollar, Australian dollar, or you now have the option of the AUM, Alpha, Umbrella, Mary. That's the Australian dollar, US dollar, okay? So, looking at the Aussie, on the 240, if you're looking intraday, uptrend. I'm looking for, at this point, what's my only option? Well, what's my only option is my option. What's my only strategy here? I need to pull back. I need to pull back. So I'm waiting for a pullback within the context of this uptrend. On the daily, same thing. We just had one. We just had about a week of a possibility for pricing out those calls on a pullback. So many times you've had this opportunity over the past July, August. Here's July, August, September, October, now into November. Had quite a few opportunities over the past, 6 months, I guess. 5 months, 4 or 5 months. Okay, that's the Aussie right there. Again, my preferred time frames for option trading are those longer time frames, daily, 240. No smaller than 240 though for me. How about the Kiwi? Well, the Kiwi and the Aussie are very sympathetic in their movement. They're both com dolls, which means it's going to be a relationship back to commodities. I look at the continuous commodity index to get a good idea of where these pairs might be heading. But the wave's going to give you a pretty good idea too. So there's a little bit different scenario here, isn't it? Up until about, well, unfortunately, last week would have been a great time to look for, to bracket this market, or look for calls. Today, you're going to pay up. Yesterday, you're definitely going to pay up. So nothing doing right now with the 240. Okay. It hasn't quite gone into a trending market, but give it another day to settle down, because if you have been pricing the option, that's why I say it's really important that you price these things and get an idea of how the premium changes day to day, is you get an idea of what this pricing was back last week or even the week before compared to what it was Monday and Tuesday. With a 240-minute chart, well, this might be a more realistic opportunity as far as the time frame for the Kiwi, where I've already got the markup cycle intact. So now I'm waiting for what? A pullback. Okay, and quite frankly, I'm probably waiting on a pullback on this chart as well before I buy a call. All right. Okay, how about the Canada? Okay, by the way, the Kiwi, the symbol for the Kiwi, you get two choices there as well. You have the US dollar, New Zealand dollar, NZD, or you have the more Forex-friendly NDO, which is the New Zealand dollar, US dollar. So you can look at either one. Again, the NZD or the NDO. Okay? Okay, moving on to the Canada. Again, we'll start with that 240. Downtrend, I'm looking at what? Puts. Within this downtrend, the symbol for the Canada is the CDD. Again, CDD for the Canada. I'm looking at possible puts here. I'm looking to take advantage of the momentum as it goes down on this chart. But not now. I need a correction. As long as the angle is intact, I correct with good containment from this trio of moving averages, I'm comfortable with that. What about the daily chart? Okay, this is a little bit more promising now, right? Sideways market cycle, bored or confused? We're pretty close to some some lows here, aren't we? So I'm going to be a little bit more apt to look for calls, but certainly I could bracket this market. But personally, since we're so near lows, I'm more likely to bracket. And where might I look for upside targets? Pull a Fibonacci, look at past highs, okay? Look at where the market had topped out before. This might be a good level right up here, where we topped out before, near basically 1100. All right? Okay, so let's see what we have here. What patterns do I look at? Well, you know, if I'm going to match up patterns, there's two types of patterns. You either have trending patterns or consolidation congestion patterns. If the market's trending and I want to utilize patterns within the trend, I'm looking at channels and wedges mostly. So I'll be looking at the downtrend falling wedges or down channels. In a rising market, I'll be looking at rising wedges or up channels. Okay? I use the hour chart as plug-in on my charts to automatically identify patterns, which is a nice luxury. In a sideways market, I'm looking for possibly flags, which are very short term, but more often than not, I'm looking for triangles or rectangles, sometimes even head and shoulders, which aren't my favorite, but those are another opportunity. Take advantage of the movement around the neckline. So those are some chart patterns. And again, just like you have strategies for trending versus non-trending markets and options, the same thing works for chart patterns. You have trending and non-trending chart patterns. So you still need to sync up the market cycles to the right strategy as far as pertaining to which chart pattern. The strategy for a wedge is very different than the strategy for a triangle. The market cycles each one should be occurring in are also very different. Wedge is a trending pattern, triangles are non-trending patterns. Okay? Let's see. What other questions we have here? As far as the 200 SMA, the 200 period simple, I do love the 200 period simple because it is the most psychologically significant indicator, period. And what I mean by that is there is no indicator that is more watched or talked about than a simple 200 period moving average. None. Okay? Because of that, I'm not saying it's the most powerful, I'm just saying it's the most psychologically significant. So because of that, it becomes very, very strong support and resistance. And certainly, you can even, depending upon the proximity to the current price, you can even use a 200 period simple to help you identify potential strikes. Again, depending upon where it's at, of course. I don't know that I'm necessarily looking at a 1400 or 1450 strike, but if prices move in my direction, that's certainly one consideration. Might be a little bit more applicable to an intraday chart, but certainly depending upon the proximity to current price, your 200 period SMA could be one way to help you determine strike price. Certainly. And it is, again, a very important moving average. All right, let's see. As far as different brokerages, gang, I really have no idea as far as different companies offering different symbols. But the truth of the matter is if you don't have access to the new kind of Forex-ish symbols, give it time. They're new. And you can certainly take advantage of everything I just talked about with the traditional symbols that have been available at the ISE. Okay, just remember that if you're looking at a pair like the Aussie, the Kiwi, the cable, or the fiber, you're going to have to kind of, they're upside down in a sense. Okay? Because the dollar is the base currency, is the first currency. So just make sure on those pairs where you have, typically the dollar is the second currency, again, Aussie, Kiwi, cable, fiber, and just kind of understand the relationship between whether you're looking at a put or a call based upon the Forex pair's underlying price movement.
Please visit www.ise.com/podcasts